My guest today on The Brief is a Wharton Investment competition semi-finalist. Top 50 out of over 6,000 teams and 25,000 plus participants. And he's also studying at UWC Robert Bosch College. But what he told me about investing completely flipped my expectations. Because it turns out, beating thousands of teams isn't just about knowing more, it's about thinking differently. And in this episode, we break down exactly how him and his team did it. But firstly, let's show you a 30-second snippet of the video his team presented for the global semi-finals. Enjoy.
Let's take a short glance at your portfolio. It has risen with 3.45% in the 10 weeks. Our investments were diversified across various asset classes. From the 17 assets present in our portfolio, 11 had a positive evolution. The risk of our portfolio is measured on the synthetic risk and reward indicator scale, classifying it as medium risk. This is achieved through diversification in multiple sectors, asset types, and international stocks. This forecast portrays your investment over time, assuming a stable growth at 15%.
One, two, three, four.
All right, hello and welcome. What you have just seen, ladies and gentlemen, is a video from a team that has made it to the semi-finals of the Wharton Investment competition. David, how are you doing today?
Good, really good actually. Thank you so much for having me. And I guess this will be a great discussion.
It's a pleasure. David is one of my closest friends here, and of course, you have always displayed a large degree of interest in the area of finance overall, and it has been one of your major fields of interest. So tell me, what is the Wharton competition? How competitive is it truly?
Yeah, it's actually really competitive, but what it is, it's actually a really, really different competition from other investments competition because you not only have to invest, the focus is not only on making profit, you have to specifically tailor a profile for your client. Our client this year was Ladi from Nigeria, and he's actually a Wharton UPenn graduate. Yeah, and that's really nice. And in like this is a small parenthesis, in the semifinal, he actually appeared and they told us now we're going to meet this guy who you've been knowing for the last 2 months, and to actually meet him, it was really, really nice. But yeah, what you have to do is basically build a portfolio around him and around his values. They present you the study. You can search him on LinkedIn. You can search him everywhere, and you have to build your portfolio based on his values. So for example, if he's really passionate about, about technology, you invest in companies in technologies that he chooses your portfolio, not other portfolios, not based on the return, but based on his values.
Sounds very interesting. I think you provide a very good general overview of the competition. Clearly, it's very competitive, and of course, I mean, from what I have seen from my own research is that it is very distinct from other investment competitions in the sense that its aim is not necessarily to have the largest portfolio, but more so to kind of deliver a good portfolio that kind of appeals to the values of your client. So in order to get a very good grasp of your performance overall, which has been truly fantastic, clearly, what was your team's investment thesis and what do you think made it different compared to some of the competition?
So I think one of the main points was diversifying. Like, as probably our viewers know, if they are passionate about finance, the stock market has a total of 11 sectors, right? And you have to be invested in as many sectors as possible in order to minimize the risk and maximize your returns. Also, another thing that was really interesting was our presentation format. Our document that we had actually ended up sending to them, and also our video had really nice graphs and really really understandable graphs for the client. So the client does not have to have the knowledge of investing. You just present him kind of translated the complex knowledge of investing into English, basically, into some images, into some pie charts. And I think everyone can understand them. If they see like a really colorful pie chart, everyone can understand, okay, this portfolio is diversified. We're not only investing in technology, we're not only investing in one stock, we invest across 9 sectors, and we actually had 17 different stocks in which we invested. Also 2 ETFs and 1 treasury bond. So that's pretty nice.
Sounds very fascinating, I have to say. I mean, it's of course very diverse, and Would you say that that decision is what kind of made a pivot for your team, or that's what kind of made a large difference? And if not, what do you think is the largest variable that kind of contributed to where you guys are now, of course?
Yeah. Also, this played a huge role, but especially I think our attention for the client, that was really, really crucial. And I think they made that really, really clear at the beginning of the competition. This is not a competition where we try judge you based on the profits, because up until I think the final days of the investing simulation, you could see a leaderboard with who is leading. There were some teams with plus 70% in 2 months. That's crazy returns, but they didn't pick that team for the semi-final because they wanted teams who specifically tailor their portfolio for Ladi, for the client. And I think that this is really, really relevant in the real life as well. Yeah, when you're working at a hedge fund, for example, you have to pick a portfolio for your clients. If your values adjust with your clients' values, it's much more understandable. It's a much nicer conversation between you and them. And they understand that their money is actually making an impact in the world. And that was an actual quote from Ladi. He said, I don't care in what I'm investing, but I want to see an impact. It doesn't matter if I see it now or in 10 years, but I want to see an impact. And that's what we did. We invested in companies that actually have a really, really huge impact in the real world, but also try and find companies that are profitable at the end of the day. That is the purpose.
Like generally, I do feel like, I mean, impact is a core thing of, well, as a UWC student, you always hear about impacts and everything. Much less towards the financial sector, of course, but more towards the aspects of sustainability and then the international peace, which are all equally important as well. But I think that application of that diversity and that resilience into the financial sectors is truly an element that made your team stand out. So we're starting to get a bit technical here, of course. So how did your team approach the research and lab analysis necessarily? And did you have like a defined research method you followed, or was it kind of a very wide range or wide selection?
Yes, this I have to give credit to the competition, because in this competition, if you don't know anything about finance, you just say, oh, I think this could be a really nice field for me to work in the future. I like it. So, okay, but where do I start? The competition gives you actually, I think, 11 separate lessons on what to do. And they give you everything. When I mean everything, they give you everything. Cash flow statements, they give you everything you can imagine. And they teach you how to basically analyze a stock. And that's what you mean by research, right? How to analyze a stock. And they gave us all of that. For example, I had experience, and I've known for, I think, 4 years I've been wanting to do this, like finance, sustainable finance. But people in my team, for example, didn't have that much knowledge. And through these slides, we taught each other what we knew. And that was really, really good, I think, from the competition. Our research was basically everybody managed, I think, 2 sectors, 3 sectors, depending on the person. And they said, yeah, okay, I like this company in this sector because 1, it aligns with Ladi's values to this point. 2, it's also making an impact and we can see that impact. And 3, it has also really good, it passed the fundamental analysis test and the technical analysis test, which also the competition taught us to make. Yeah.
That is some interesting framework that you guys follow. This kind of how emphasizing how, even though you may not have, I mean, as we've seen with some members of your team, even without the necessary exposure to the field of finance, you can still manage to do a very good job given good research and given enough interest in the field and willingness to learn. I think truly that is something that made the dynamic very beautiful, is that everyone is kind of teaching each other. So it's much more of a marathon than a sprint in that sense. And going back to something that is really interesting, I mean, as we know with portfolio management, you're dealing with someone's financial stability that is on the line, and it is not something that is very light in that sense. Hence, it is very necessary to evaluate the risks and the rewards of each investment and each step that you take. So how was that process for you guys to evaluate the risk and reward of such projects?
Yeah, so the risk is basically, you can calculate it through many, many methods, but we use the standard deviation method. I know this is a bit technical, but like, bear with me. So the standard deviation method, what it does, it's a really complex math formula, but you don't have to calculate anything. You just plug the numbers in and it gives you the result. and it gives you a result as a percentage. Let's say ours was 8%, and that means the portfolio in a normal year, like regular year can drop a maximum of 8%. Normal year, I say maximum. Of course, it can drop more, but we're not really going right out to a recession. So when we were not really going to a recession for now. For only correction for now. Yeah. And through this formula, we calculated the risk, and it was actually, now that you mention it, I remember one really important thing that I think set us apart from any other teams. It was that we had from the beginning, we sat on a board and we said, okay, we're going to have some non-negotiables. We cannot break these promises we make towards our client and towards ourselves as well. For example, don't be invested in less than 9 sectors. Don't be invested in less than 10 stocks. Don't have less than 2 ETFs. Have a standard deviation less than 10%. And we've actually managed to keep all those promises. And that actually shows like disciplined investing that happened within our team. And yeah, the standard deviation was below 8%, so the risk wasn't as high. And the return in I think it was 12 weeks when we ran on the simulator, the Wharton Investment platform, it was, I think, 3.4%, something like that, 3.5% in 12 weeks, which is solid return with low risk. For his objectives, it was really good.
Yeah, and I think, of course, I mean, taking into account the volatility of the market, especially within that period of time, staying at such a consistent 3%, of course, I mean, as you mentioned, they're actually with 70%, which is astounding, but it goes to show how disciplined investing and actual taking into account the risks of each investment actually goes a very, very long way.
Yeah.
So moving away from the technical parts and kind of into your own personal journey to the competition. So how did this competition change your thinking around finance and investing overall?
I think before, I obviously knew that there was more than just profit about investing, but I didn't really know what that meant. Like it was up there, but I didn't really know what that meant. And this competition actually showed us that, okay, you have a client, that client relies on you to invest his money, to invest his retirement savings, to invest his basically financial, not even safety net at this point. And that's why you really have to take care of that money. And so it's not a game, because some people say, okay, right, you bet on the stock market, you bet on something, but you don't really bet. You try to make the best decisions for your client. And in the same time, this was really, really difficult. And that's why I keep emphasizing it. You have to be in line with his values, because, for example, he said, not directly, but indirectly, I don't really like investing in oil companies. Okay, the oil companies in the 12-week period, they were up. We could have made an easy profit with that. And it was also the period when the election in the US was, so there's a lot of volatility with that as well. And it was really interesting to see how the market performed. But overall, I think this is the most important thing, taking care of your client's money, because if the client were you, how would you do it? How you do it with your money? This is your job, basically. He has another job. He trusts you. He gives you some commission probably. But yeah, you have to really, really take care of his money. And that's, I think, what I learned here, because I was in a previous competition at Harvard, where we actually took second place in similar like investment competition. But it was just who made more money and who can present their strategy even better. But even then, we chose to take like a different approach on our strategy. We chose to make something. At that time, ESG investing, it wasn't that big of a deal. It was, I think, 3 years ago, it wasn't that big of a deal, ESG investing. But we made our whole presentation around that. And I think that really made the judges go in our way. So, yeah.
That is truly fantastic to hear. I mean, of course, there's a lot of personal growth that comes with such an experience. I mean, moving from one competition to another and with some differences and everything, it gives you a very different worldview. And speaking of perspective overall, what advice would you give to someone that's entering the competition next year?
Okay, first of all, study the client. The first week, the first 2 weeks, it doesn't matter. You don't have to know anything about investments, about stocks. Just study your client. That's really, really important. And I think that's what especially made our team go forward, because we actually had to another parenthesis again, he had some plans. Like with the money he invested, he wanted, okay, in 10 years, I want to start building this complex in Nigeria, in his home country. And in the next 15 years, I want to add that and that to the complex, and I need that much money. And I think it will vary with inflation. So we also have to take that into account.
Yeah.
And we actually spent like, I think 2 pages or 3 pages of our 14-page report just on that, saying, okay, this is how we're going to achieve your goals, because your goals are important. It doesn't matter if you do 20 extra money.
Yeah.
It doesn't matter as long as you achieve your goals, because that's his final goal, building this multi-use hub, it was called, in Nigeria. So yeah, to the teams participating next year, first of all, don't be scared if you don't know anything about investing. The purpose is to learn. And if you manage to get a really good position, that is because probably you have taken into account your client's needs and values.
Sounds very insightful. Well, thank you very much, David, for joining us. We're truly happy to have you here. And yeah, stay tuned for the next episodes of The Brief. And thank you again to David.
Thank you so much.
Stay tuned for next episode.